Hey, what's up, TradingView? The last trading day of the year is here. It's coming to a close actually pretty soon. I want to go over a small presentation I prepared for you guys, but before we go into anything, I want to show you a trade I have on gold, and I'll explain it pretty soon. It's actually breaking out of a key level um, right here. The circle levels over here. It's trying to break out of that key level. So I hope to witness a breakout soon. Um, and then if that happens, then my TP could be hit. So we'll talk about this in a minute. Let's go to the PowerPoint and I'll explain things a little bit better. So today, in this daily primer, I do want to talk to you about key levels and the importance of them and why we work very hard to set them up. Now, know your levels. The point of this daily primer is all about key levels. Before we begin to that, I want to explain something. You should not make your trading harder than it is. Trading is already hard enough. One way to make your trading much easier is to know key levels. Keep track of them, have a system that says when you're going to buy and sell at those levels, as quickly as possible, of course, and then just execute the trades, i.e., follow the process. Follow the process, follow the process. I talk about cause and effect a lot. Cause and effect. Good causes, good results. Bad causes, bad results. Anyway, when you know your levels, all you need to do is follow up on them, set alerts, and so forth. Now, when you know those levels, following up on those alerts and checking them and so forth, all you need to do is execute your system. Make your job as in day trading or whatever else you might be doing as simple as possible. But I will be talking about day trading because it's the easiest thing for me to explain. Okay, so day trading for me is is easier to explain because that's what I do. I can't teach you to swing trade if I haven't been swing trading in quite some time. Anyway, knowing your levels makes our job, day trading, much easier. It's much easier when you're prepared, and this type of preparation is actually very easy. Soon I'm going to explain what I do, and I'll show you a small snippet of how I do it, but I have 5 minutes and I got to shoot because the shop I need to buy water at and everything else for the house is about to close. Anyway, we are looking for an edge, always. And keeping track of levels is key at making easy money, basically giving us an edge, at least for our day trading system. It's a very simple approach. Um, so what I do is I sit down every Sunday and I map out important levels. While I'm doing that, I'm also doing something else that's called reviewing my trades from the previous week. Every one of us has a history tab on our trading terminal. Everyone, every single one of us. It is very, very useful and comes highly recommended that we sit down and review our trades. It's pure development and improvement at its finest. So, um, while I'm reviewing those trades, I'm also reviewing the past key levels and what I could have done at those levels and so forth and so forth and so forth. I'm always checking, trying to specifically increase my edge for the future weeks and future trades and so forth. So, um, what I'd like to do now is show you just how important these levels are, but I also do want to go over this and tell you you should check this video out. It's called The Power of VWAP, and I explain a little bit about it. So for the time being, we're going to go over to CTrader, and I'm going to show you these levels, but let me just close a trade on my other account. We're done. We use a custom ATR setting. This is it here, ATR stops. And what it does is it forms these little highs and lows. So for example, and this is just a 100 tick chart. For example, here there is a resistance on gold right now, okay? Which tells me, Dennis, drag this SL up into profit and secure it. Secure it. I've got my TP for the breakout, and the last level is the most important one in my book. So for example, here, price action, these were the levels, this is the level, this is the level, and here, look, there is a level right there, you see? And price action hits that level and starts moving up. A confirmation kicks in for a long, but we come close to the previous level, which is this one over here, and we reject this and we go back down to the previous level. And as long as those levels are holding, and you can see here we start forming higher lows, hence why I executed this long. I can take it now, grab a nice 100-point move. It's not a lot, it's small, but it's good. And secure a profit. But I'm going to try and trade this breakout because I believe that there is momentum towards the upside. Specifically looking at the 5-minute chart and everything else, I think that we could at least try and push there towards the close. Um, anyway, having your key levels is vital. Now we are working on adding these indicators to our trading view, and they should be added in early 2022. So all of our indicators are being created right here for trading view, just to make everyone's life easier in our community and for ourselves too, because what's it called? These these indicators are powerful and they work really well. There are many ways to find key levels, and I'll tell you a couple of them right now, and then I gotta shoot, and we'll do a better, longer video about this later on. So one of them is rejection levels. Rejection levels are these levels here. You see, that's a rejection level. This basically, without even looking at volume, this tells you that right here, big buyer or seller came out. And what happens here? We go below that level, we go above that level, we go below that level. Now we're above, we tap and push. So knowing this level is vital. Extremely, extremely vital. Spikes, very important. You can see them work many, 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 many times. For example, over here, here is a spike. And look at this. Price action for the spike. We try to go above, we can't. We're using it as a resistance. And what happens? We end up tumbling towards the downside. You see that? Eventually here we have something similar. We're trying to hold below. We can't. We move up. You get it? So one way is spikes. The other way is using indicators. For example, you can add, for example, this is a very simple indicator to find key levels. Don't change channels. I'll show you now. Settings, style, remove the basis, remove this. Leave it at 20 if you like. And then all of these straight lines of the Dogechain channel, the longer the straight line, the more powerful the level. Okay, so and just it basically gives you tops and bottoms. So for example, here, look at this. Let's clean this up. Here there is a spike and the straight line, of course, and you can see price action comes back to that level, shoots away, comes here, spikes out, closes above, shoots up. You don't need to be grabbing major trends and so forth in order to make money in day trading. All you need to do is know levels and appreciate that the price could be going towards those levels. If you watch my VWAP video, you'll understand that price tends to gravitate right back to the VWAP, and especially throughout the day. Perfect for day trading, by the way. Really, really easy momentum, and really easy trades can be set up. But I wanted to talk much more about this. I'm just running out of time. I got 10 minutes, and knowing the shops over here, they'll probably close sooner. So I gotta shoot. I'll make another video later. Thanks for watching this. I hope you learned something. If you did, drop us a comment and let us know. Thank you. Bye-bye.